All right, what's up, everybody? How's everyone doing? How's everyone's day going so far? Hey, Shirley, good evening. Good evening, BXT. Got a name that's a password. What's on people's minds today? What do you guys want to go over? What should we attack here this evening? How can I help? Who wants to get things fired off here with question numero uno? Anything from anyone? What do we got? What's up, Andrew? I swear I gotta get a pretty face on screen here for you guys to start asking questions. So what computer, etc., do you recommend for trading? Honestly, you don't need anything too crazy, right, Shirley? The computers that I used at the fund I worked at were honestly like the most basic, cheapest Dell computer that I'm sure they could find. There was nothing super fancy about it or anything particularly nuts. The main thing you want is something that just has a reasonable amount of RAM. So I would think like 16 gigabytes of RAM would be sort of what you're looking for, just so that your web applications all work smoothly. If you have that, amazing. Think about it this way. If you can watch YouTube on your computer, then it's probably good enough to trade with. The big upgrade that a lot of people enjoy is running a multi-monitor setup. So having, one monitor to execute their trades, one monitor to watch the stream, that seems to be a sweet spot for a lot of people. That doesn't have to be two monitors on the same computer. You could use a laptop to watch the stream. You could use an iPad, a phone, whatever you want. I think that would be really interesting. Hey, Roberto. I'm interested in volumetric entries with limit orders. Do you hard set the stop loss or let volumetrica move it by your tick limit based on your entry price? So the way that Volumetrica does it, right, is when you set your order window up and you say you have a 10-point stop loss, even if you buy a discount with your entry, you're still going to have that 10 points of risk. So generally the easiest and smoothest thing to do is to just focus on the quality of your entries. And then once you enter, if you want to tighten up that stop loss, right, if say you got a 5-point discount, to then drag it up to the high or low of your entry candle or where you want your stop loss to be. That's going to be the smoothest process to execute those trades smoothly without having to complicate your order window significantly. Yeah, today was a bit of a weird day. Andrew, I agree. Bit of a V shape on the markets. Maybe a bit of a capitulation day from bears. I mean, 514 crypt. When I'm talking about my trades, when I'm mapping them out, dude, you have all the information you need minutes before the trade ever happens, right? So if I'm looking at a position, it's going to have stop loss in red, profit target in white, and my blue line is my entry target. What I don't want people doing, because it simply doesn't work, is waiting for me to say that I'm in a trade or I'm looking at something or they wait for me to execute and they're trying to stare at my screen prior to them entering. You ultimately have to make a decision on when you're going to click that button. I can't force you to do that. I can't coerce you into doing that. And I give you more than enough information to get exactly what you need prior to ever making an entry decision. So no, I don't show my personal portfolio on the stream. Too many security concerns with doing that. And so I have zero interest in making all that information public. You get more than enough info. I talk you through every decision as it's happening. If that isn't enough, man, tough shit, but it's going to have to do. Yes, correct, Shirley. So your max drawdown that you can have is 3%, right? So $4,500 on a 150K account. But yeah, I would disagree about it's less clear when I show it on TradingView. I would strongly disagree with that statement. That's a skill issue, not a me issue. Generally, I would say no more than 1% of your account per day. You know, guys, if you want to be a profitable trader, right, you kind of have to think for yourself to a certain extent, right? So, you know, I give you a 10-point range for where we're looking for our entries. That's incredibly precise on a nearly 30,000 point security. If that isn't a tight enough range for you, nothing will be. And excuses for missing your executions aren't that. I would look internally instead of looking for someone to fish more for you. Yeah, that's exactly it, Andrew, right? So our system works because we keep our risk tight. And if we're entering into positions where you're waiting for me to say that I'm in, or you need to see me do X, Y, Z, all of a sudden, by the time you enter your trade, it's going to be 10, 15, 20 points different than what my entry was. And all that means is that when we win, you make less. When we lose, you lose more. Fundamentally, that is a broken structure. It doesn't set you up to be successful in any context. And so I have no desire to, create scenarios where people are more likely to lose. But it is the reality, right, Andrew? Right? Like if you're 30 seconds behind my entry because you're waiting for me to see it, and then you set up your order window and then you click submit, you're going to lose a lot more when I'm wrong, and you're going to make a lot less when I'm right. And then I'm going to have to explain that, right? So we have to pick our battles here. The one that I've chosen to fight is trying to make you guys as much money as possible. That's way, way better for everybody. And like I said, I think I'm very transparent over what I'm doing, why I'm doing it, and I map out everything on a daily basis. So figure it out. It's not difficult. What else we got? Yeah, and it's fundamentally not legal for me to do that either, right? So let's not ask for scenarios that will get me banned, shut down my business, and create a tremendous amount of lawsuits. That'd be much appreciated if we could avoid that. So I've got 3 setup triggers, right? To break out through the opening range, so breakout through the blue box, a breakout above high of day, or a reversal away from low of day or high of day, right? So to the upside and to the downside, so you have a breakout through the opening range, breakout through high of day, or a reversal, or to the downside, right? Breakout through the opening range low, breakout through low of day or reversal above high of day. Depends on your internet speed. Again, like I said, right? Like if you can watch a video on YouTube without any issues, then your computer/internet is good enough to trade. I've used both Ethernet and Wi-Fi. I've used Starlink. I've used various internet providers. They're all fine. They're not going to be the bottleneck. It's 2026. Everyone has good enough internet to trade. It's all on my website. Buy a prop firm account at daytraderfunding.com. Use the coaching tier, and you'll be able to trade with me during your evaluation. The link is in the description. And then the website stream is zero latency. So again, right, there's zero reasons why you wouldn't be able to execute trades alongside with me. What else we got here this afternoon? I feel like a lot of stuff here is Google questions, not trading questions. It'd be great if we could get to some trading questions. Yeah, well, you don't need to book a call to purchase a prop firm account, Chicas, right? Like I said, link in the description below. Use your 40% discount. Log on to the website, and you'll have access to everything you need without needing to speak to a human. Go check out daytraderfunding.com/trading desk. Give you everything you need. And if watching me stream doesn't help you get past and you fail your eval, we'll reset your eval for free. I can get caught in going the wrong way. So you're saying you go short when you're trying to go long? Shirley, is that what you're trying to say? Honestly, this is just going to be a sanity check your order window, right? Make sure your order of operations is correct. You know, it's all about executions. So, you know, focusing on the quality of your decisions, making sure your order window looks like how you expect, right? Dot your I's, cross your T's, and you should be fine. There's no like coaching feedback I can provide on clicking buy or clicking sell. You have to make sure that you're aware of what you're clicking before you make a purchase. So what do you mean by consistency? What does that mean, Roberto? So let's define some of these terms first. Well, you're going to get stopped out on trades all the time, Charlie. Like my win rate is like 52 or 53%. The reason I make money is because my average win is 4 times bigger than my average loss. So it's not about, or like, who cares if you get the direction wrong? You're going to get stopped out and faked out on a bunch of trades. Happens all the time. You just got to keep your losses small, and when you do get your winning positions, maximize and focus on closing as your P&L is increasing. No, I get that, right, Roberto? But I'm asking you, right, is what do you think consistency means, right? So it's kind of a loose term. So I want to make sure that we're speaking the same language here, right? From a prop firm perspective, consistency means that your average wins are similar, right? That your average losses are similar, that you take the same amount of trades on a daily basis, right? That's what that means from that graph perspective. But what you're asking is something different. So trying to make sure that we're speaking the same language. You got to think about it this way, guys, right? What we're trying to do is we're trying to evaluate you on how good of a candidate you are to be pushed to live capital. So someone who makes 10% but had 15% worth of drawdown is not a very good candidate to be pushed to live capital. Someone who had, 1% drawdown to make 3%, that's a very consistent profile, right? That's something that we can scale. That's something that we can push and improve. So it's about tightening the variance between your wins and your losses, and then not doing dumb things in between. What else we got? Oh, I mean, I'm looking for one, Shirley. So if you find one, let me know. But I think I think one thing that a lot of traders struggle with is that they don't give themselves permission to make mistakes, right? Mistakes are inevitable. They are actually something that you should embrace because every mistake you make is an opportunity to learn and get better. So the process here, or the objective, isn't to avoid making mistakes altogether. That's like an impossible standard that we will never accomplish. It's about making each mistake into a learning lesson. So the objective, or the process that you want to do, right, is evaluate each trade independently. What did I do well? What can I improve? What can I focus on for tomorrow? If you honestly answer all three of those questions on every single trade, well, you'll stop doing the dumb things, right, that consistently happen, because you'll find solutions to those problems. So making a mistake, paying tuition to the market is not a big thing. Constantly repeating the same stuff, well, that's what slows you down. So most people look for external validation to improve their trading, when in reality the reality is that you make more money, or you improve, or you get better when you start to do more internal reflection. So no one, like we talked about this on Monday, but no one is going to come save you, right? Like there are no holy grail strategies. There's no perfect technique. There's nothing that works 100% of the time. So all we can control is the variables that we can control. And so we need to put all of our energy and focus into that. I can't control what the market does after I enter my position, but I can control what I learn from, what I do on the next trade, right? How I react in the current trade. And the more I study those patterns, the less and less I'm going to start doing the dumb, obvious things that cost me money. So I can avoid the overtrading. I can avoid oversizing. I can avoid skipping my stop losses. I can avoid all those things. And if I focus on those variables properly, then everything else kind of falls into place and takes care of itself. The challenge that I was given when I first started trading, or at least when I started trading institutionally, is we were forced to ask ourselves three questions, a slight variation of the three questions I just asked you. And they were, was it me? Was it the strategy, or was it the market? Right. So sometimes, like today, market's going to give you some looks, but it just doesn't want to cooperate. That's fine. You're not going to hit 100%, right? So it's no big deal. The question is, did I do something that I shouldn't have done? Did I make decisions that made my trading worse? If the answer is yes, then why? If I can find my why, I got to find the reason why I did that, right? So was it because I was greedy, because I was fearful, because I was anxious, because I wanted the payout, because I wanted to pass my eval, because don't feel like it's going fast enough, whatever it is. And once I have the answer to that question, now I'm aware of what my like hidden bias is, and I can start to make a better plan on how to adapt it. The challenge I was given at Air Rain was effectively, if I answer those questions on every single trade I take for 100 days straight, do I think I'll be a better trader than I was 100 days ago? And the answer to that is fundamentally yes. So the trader who you are on day one doesn't have to be the trader who you are on day 100. And that's the challenge. So, I know it sucks, but most of the time we think that we can find our answers to our problems by studying the market in more detail, or reading more, or buying another course, or joining another Discord, or doing whatever. And you might find something that gives you a little bit of extra joy for a month or two, but then you're just going to revert back to the same habits that made you unprofitable trading the previous strategy or the previous Discord or whatever it is. So we got to stop looking for the Holy Grail and realize that the only Holy Grail in trading is turning it into a game of self-improvement. And when we put all of our energy, our focus, our enthusiasm into answering those questions, you will be surprised at how quickly things compound. You know what, John? It really depends, right? If you look at your trading history and you see that after 3 stop losses on trade number 4, you go on tilt, then no, stopping after 3 is not too many, right? If you find that on trade number 3, you feel tilted and you need to revenge trade, then yeah, the third loss is probably one too many. So that's going to be an answer that you can find in your trading data. And I think it just requires like an honest conversation. In general, I would say that most people overvalue how much pain they can actually stomach before their psychology changes. So if you feel like at trade number 3 that you've been stopped out on, you're flirting with disaster, then 3 is probably too many. The alternative, right, or the other option there is to size down your trades, right, and see if it's actually a number of decisions that puts you on tilt, or if it's a P&L thing. Fundamentally, everyone has a number that breaks them, and that can be a number of trades that they take, that can be a number of losses that they take, that can be a P&L down number, that can be a P&L up number. And so it's about looking at your data, finding what your baseline is, and then making sure that you're not flirting with disaster. If you're risking $500 per trade and you've got stopped out on 3 trades and now you're down $1,500, if that number stings, or if that number bites, or keeps you up at night, or ruins your mood around the people that you care about, then yeah, it probably is too much. But that number is different for each individual trader, and it honestly varies a little bit day by day. On the days where, let's say the previous day, right? So, today's Tuesday. So let's say yesterday, right? Hypothetically, had a really, mixed trading day, we'll call it, right? I didn't have any trades yesterday, but just hypothetically, I had a mixed trading day. And then, I was snappy with my dog. And, when I was talking to my girlfriend, I was being a bit cranky. And then I didn't want to eat my dinner. Well, okay, you know, I probably wasn't feeling my best. So I know that for Tuesday, I probably need to limit my decisions because my mental capital is already strained. There are other times, right, where life is hunky dory. I woke up with a nice surprise. You know, you're feeling good in the morning and you're feeling sharp and you got all your mental capital. You know, sometimes you can take 6 trades without feeling that tilt feeling. So it's about recognizing your patterns around what sets you over the edge and then just realizing what like the feeling is 15 minutes before you go on tilt and recognizing what that pattern looks like. And once you get that pattern or identify that pattern, you can learn to walk away. So having that self-control and that discipline is more important than the actual number, but the actual number is important too, and it is a little bit of a variable. What else we got here, team? Oh, here's, I might have 2 mics going. All right, is that better? Is that better? I think it should be. I think I had two mic sources going there for some reason. Apologies. Sorry about that, guys. Oh, come on. I'm not that evil. All right, what else we got here? Hey, appreciate that. Thank you. It's both something I'm proud of, but it's also the bane of my existence. Oh, it was just a base model Carrera, but it's just so fun. You're so low to the ground. You feel like Michael Schumacher everywhere you go. It's pretty awesome. And yeah, it's just so agile, so instant response on everything. Oh, you know what? So if we're gonna go and you know, if I were to answer my 3 questions, right? Was it me? Was it the market? Or was it my strategy? Today, I would say it was me, right? Like to a certain extent, once I started talking about that and started thinking about it and had that, you know, flirting around in my brain, you know, you kind of trigger that like P&L brain response instead of the logical trader response. And I think that probably had a pretty negative impact on my trading this morning. And I think it's always like that. Again, first, so when I moved to the UK, I was 18 years old. And about 3 months into moving there, I started volunteering at a prop firm, like a physical desk prop firm. And I was just the coffee guy, right? And basically just a trader's assistant. And after a few months of doing that, I convinced them to let me learn how to trade. And I don't know, maybe like 2 or 3 months in, I had my best day ever. I made, I think it was like 7,500 pounds, which was truly incredible. And I remember taking the tube back to my place where I lived in Shoreditch. And it was like maybe, a 45-minute tube journey all in, door to door. And as I was sitting down on the tube, I brought up Excel on my phone and I started to imagine what it would be like if I started to compound those numbers on a daily basis. So, on the tube, I had the spreadsheet, if I just do 7,500 pounds a day, my account grows X by this much, my P&L will keep growing by this much. And I almost gave myself the dopamine hit of having already accomplished my goal. And when I got home that night, I started looking at all the expensive houses for sale on Rightmove, which is the UK property website. I was looking at, the fancy cars and the watches and, it's wonderful holidays and all this kind of stuff. I let myself experience 5% of the dopamine of what I actually wanted and allowed myself to dream a little bit. The following day, when I ended up going to trade, first trade of the day, kind of a nothing burger. Second trade of the day, decent loss. And then the panic set in. And all of a sudden, this dream that I'd built up in my head, this dream life that I had just spent, the last 12 hours of my life mapping out, was all of a sudden so far away. I was already off schedule. I was already off track. And that put me further and further on tilt to the point where I gave away all that 7,500 pounds I made, blew up my account, and had to beg my boss to let me try again. And that was a huge lesson for me because I think once I stop being present and stop focusing on what the market is telling me and start trading based on what I want or what I think or what I feel like I deserve, and then that doesn't happen, then it's no longer a P&L loss. It's a hit to my ego, right? It's a hit to who I am as a man. It's a hit to who I want to be as a person. And that's much harder to accept than just a number. So that for me was a very important lesson. And it's not always a very easy one to avoid because there are a lot of temptations in life. And it's really, I think it's valuable to spoil yourself and to treat yourself well. But if you think that you deserve it or you earn it or that, this is for sure going to happen, then, you're probably setting yourself up for failure because you're putting yourself into an impossible situation. One, I'm never going to make 7,500 pounds every single day and compound that by 15% a day. And then, in 6 months time, be making $5 million a day. It's not going to happen. But if I focus on the variables I can't control, then I'll probably get there, but I'll get there a little bit longer, but I'll actually get the result that I want. And I think that that's incredibly important. So that's a great question, Andrew. Do I sometimes just feel off and realize it while I'm trading? And at that point, do I stop? This might sound like I'm going to contradict myself here. There's a little bit of a balance. Because my feelings most of the time aren't real, right? And they shouldn't impact my ability to follow my rules, right? My rules are my rules. They're set in stone. I know what they are. I've practiced them hundreds of thousands of times. So generally, like I'm a believer of just powering through and powering through burnout, but that only goes so far. For me, generally my point where I feel like I need to stop is when I have like a toddler meltdown on stream and I feel embarrassed by my, like basically by what I said or how I reacted to something. If I feel embarrassed by something that I said or did or my reaction, that's generally my trigger to stop. If I need every little variable in my life to be absolutely perfect for me to have a good trading day, then this little princess ain't ever going to have a trading day, right? So I think that there's a little bit of a fine line there. But for me, the important thing to realize is my system doesn't care about my feelings, so I shouldn't give any power to them. And generally, if I do something that I'm embarrassed by, then that's usually a sign that I'm on tilt. And if I'm on tilt, I need to be done for the day. If that happens, and it happens all the time, I have a little ritual, I guess, if you want to call it that, to kind of like snap back to my baseline. I like to do hill sprints. So for every $1,000 that I lost, I go do one hill sprint, right? So if I lost $1,000, okay, I do one. If I lost $10,000, I do 10. And that generally kicks my ass. The dopamine of doing that exercise and getting that fitness in generally also resets me back to a baseline where I feel pretty reasonable about myself. And then I make sure that I order myself like a really nice meal or make myself something really nice to eat. Watch maybe an episode or two of my favorite TV show or a movie or a sports game or something like that. And then I try to get to bed earlier than I normally do. That's kind of my routine. I think it's inevitable that I'm going to have many of these types of days over the course of my career. So just finding a way to get back to my normal is really important. And that's sort of what I've found to be really beneficial for me in my trading. I hate when I embarrass myself on the stream. It makes me feel like a tremendous hypocrite. So it's not something that I particularly look forward to or enjoy or want to pursue. But I think that's important to acknowledge and to be transparent about. But yeah, like, you know, it's hard to not bring your personal life into the office. You know, it's impossible at times. So I don't try to avoid it or run from it. I think that there's a certain element of strength in confronting it and saying, fuck you, I'm going to follow my rules anyway. And I have found that framing to be a lot more powerful than, needing to succumb to those sensations. The other thing that I like to remind myself on those days where I'm not feeling maybe my best or like, oh, gotta do this again, is just reminding myself that most of the thoughts I have aren't actually true, right? So when I, like we all have, or not all of us maybe, and there's some people that don't have a voice in their head, but we all have this little feedback loop that we tell ourselves, right, when things don't go well. And I think that one of the things that I found about streaming my trading every single day is that I don't have a filter. And what that means is that I'm basically going stream of consciousness, right, when I'm talking about stuff. And so when I get those thoughts, I say them out loud. And when I say them out loud, I hear how absurd they are. And usually when I realize how absurd they are, they kind of like make me chuckle. And it kind of like snaps me back to reality. So one, you don't have to believe every thought you have. Not every thought you have is true. Two, especially in trading, most of the thoughts you have aren't designed to make you money. They're designed to do the easier thing. The easier thing is usually to succumb to your emotions and to like alleviate whatever pain you have by making another dumb decision and basically just like pushing that pain further out in the distance. And the antidote to that, right, is to fall back on your disciplined trading habits and to be more successful. The third thing, I guess, right, is the whole point of being a systematic trader is basically turning your process into muscle memory. And the whole point of muscle memory is that you can trade without thinking. You basically are just doing. And that allows you to really stay out of that, like I'm in my head too much type feeling. And I think that's a really important baseline to establish for yourself. So we all have them, right? Like, it doesn't go away. My boss, Peter, the guy was worth $11 billion. He owns Williams F1 racing team. He has every toy imaginable, right? Every lifestyle perk you could think of. Guy practically lived on private jets. At any given time, if you walked into his office, you would see just a wall of monitors on the floor by his door that were broken and cracked. And, you know, everyone has these moments of tilt. Everyone has these moments where they lose control. You got to just find a way of managing it. I'm not rich enough where I want to buy a new monitor every time I have a terrible trading day. I can't quite justify that. I'll end up spending 20 grand on monitors in a year. So it's important that we find healthier ways of managing that anxiety. Yeah, Marty. And I think if you acknowledge that thought and you just sit in it for a second instead of instantly reacting to it, then you can usually find the will to make the right decision. So I think that's spot on the right thing. Shirley, are you asking, like, do I prefer trading Mondays or Thursdays? Like, is that what kind of you're asking? Or are you asking, like, you know, if I wake up on a random day, do I feel good? No, I mean, I'm pretty happy to trade Monday through Friday. I don't discriminate days of the week. I'm sure there's probably some days in my data that I'm probably better at, some days that I'm worse at. I don't put any stock into that information or care about it too much. I think you can galaxy your brain, galaxy brain yourself into thinking, oh, if I just do X, Y, Z, it's whatever. I've not found that to be true. The other part is I think I'm wildly addicted to this game. I love it more than just about anything else. So stopping and not trading because Wednesdays make me feel grumpy, well, that doesn't really match the ethos I have of how much passion I have for this. So yeah, I don't want to give myself that excuse to not do the thing that I love the most in this world. Good questions here, team. What else we got? And like, I'm not addicted to I'm addicted to the trading, but I'm addicted to the trading because it's gamified self-improvement, right? So what I have found in my own personal life, and I've been trading now almost 14 years, is that the more I trade, the more I focus on those variables, the better person I become effectively, not necessarily like in a charitable way, but I start to live out my values more aggressively. And that brings me more joy. And so why would I want to stop doing the thing that ultimately I think is driving my development as a man? I'm not sure if I really understand your question, John. What would you be looking for? You know, I say this to a lot of my friends and even my family sometimes. But like, I hope that I'm trading on the day that I die, right? Like I don't see myself ever being in a situation where I'm not playing this game. So I feel very blessed that I'm in that situation. Trading for me in hindsight has never felt like work. And that's something that I'm extremely grateful and honestly very proud of, that I have found something that I'm so passionate about. Well, John, I mean, look, we do the same thing every single day, right? So we trade the same setups, we do the same pre-market prep, we have the same risk management rules, we have the same risk structures, we have the same entry criteria. So all these things compound. I think if you box yourself into making a list of XYZ, you're probably just going to get analysis paralysis, right? Where you're just going to be like, oh, okay, wait, was it a 3 for 3? And then was this candle this? And was the price this? And was my risk this? And like, you're going to spend 30 minutes looking at a checklist and end up missing your trades. So I think like our trading plan, we map out on our screen and then we execute it, right, as best as we can and as consistently as possible. I think to give yourself a checklist, I don't know. I've not seen that work for people in the past. Let me put it that way. But that, like if you feel like you're missing something, John, right? That would be where you answer that question in your self-reflection. So, if you look at your trades and you study them honestly, right? And you're asking yourself those 3 questions. What did I do well? What can I improve? What can I focus on for tomorrow? If you answer those questions for 100 days on 100 trades, I reckon you'll fill in all that information in your head. The thing that you want to, like the end game that you want to work towards, right, is when you close your eyes, you want to be able to see what your trade looks like, right? You want to see what a win looks like, and you want to see what a loss looks like. And if you can visualize that experience, then you'll be 99% of the way there. That for me, I think would be the starting point. But the only way that you can make that visualization powerful is by consistently answering those 3 questions. And that's something that I still do every single day, right? After every single trade. So like the work in trading isn't the actual trading part. It's all the analysis you do of yourself and of your strategy that ultimately makes you a better trader. What else we got here, team? Any other questions? The answer to 95% of our trading problems is more self-reflection. Sucks, but it's true. I haven't said this for a while, but it's one of my favorite phrases. If you want to be a profitable trader, you can lie to everyone but yourself. All right? So that I think is a really important lesson or really important thing to understand. If we're going to bullshit ourselves, it's never going to work out. So we have to be our own harshest critic. We have to hold ourselves to the highest standard we can. And that's often very uncomfortable. But as you get used to it, it becomes easier and easier. And then you kind of get addicted to that feeling because you get the rewards for it, right? So the more you practice basically being your own harshest critic, correcting your mistakes and learning from them, generally the more that feedback loop kind of speeds up and improves. And then next thing you know, right, 6 months have passed You got 100 grand in your bank account from trading. And now looking back, you're like, oh shit, yeah, like this was worth it, right? All this effort, all this energy, all this time, it was totally justifiable. So you kind of have to believe that the hard work will create the result that you want before you see the result. And the only way that you can do that work properly is if you have those honestly challenging conversations with yourself. Nope, I'm not a believer of pushing my stop loss to protect my position. If I feel like I need to push my stop loss to protect my position, I'm kind of telling myself subconsciously that there's something about this trade that isn't behaving the way that I expect. So I'm better off closing my trade, taking that win, and not letting it pull back. My general process when I'm in a trade is if I'm feeling like anxious about something, I'm going to delay my decision until the candle closes. And at the candle close, I'm going to evaluate that candle on 3 criteria. Is there increasing volume? Did we hold higher highs or hold lower lows? So, i.e., did I close above the previous candle high or below the previous candle low? And then is the candle shape strong? If I have 2 out of those 3 things, then I'm willing to keep holding on that trade. Or objectively, I have zero evidence that tells me my idea is weak. And so my fear or my anxiety or my panic is not warranted. If I have 1 out of those 3 things, then I have a simple decision to get out of that position. If I have 0 of those 3 things, same thing. So that for me is how I think about it, right? If I'm in a winning trade and something about it's giving me the heebie jeebies, well, I'm going to wait for the candle to close. It's probably 45 seconds away from happening anyway. I can delay my anxiety for 45 seconds, no problem. That's a lifetime. So, yeah, I'd rather systemize that process instead of doing it. You know what, Marty, and I agree. I think that's often why I like to default to trading the 2 min time frame. And it's something that yeah, you make life easier for yourself by shortening down your decision curve. And if I'm wrong and the trade keeps running and it's strong, I'll get another chance to enter. So there's no like FOMO of missing out on the PNL or anything like that. Shit just happens sometimes, and it's okay. But I don't have to panic and instantly react. Right? Kind of going back to the thing we talked about there earlier. Not every thought I have during a trading day is true. So why not investigate it and get factual about it? And yeah, like you fight feelings with facts, right? So that's always the objective. Yeah, John. So I used to move my stop to break even all the time, especially when I was trading options. And what I realized, right? Yeah, what I realized is that I actually would have made a lot more money had I just closed my trade at the moment where I moved my stop up instead of letting it pull back and stopping me out at, a 10% win or a break even trade or whatever it is. And that difference when I did the analysis over Christmas 3 years ago, I think at this point, was something like $300,000. And so once I got that fact, well, it became pretty clear that my feelings of, oh, I'm just getting risk free was actually creating quite a lot of opportunity cost, and that wasn't worth pursuing. and about once a year, right? So every Christmas, I try to analyze my trading in that context. Maybe, in was it May? So in 7 months, I'll sit down at Christmas, I'll neglect my family, and I'll do that analysis, and I'll realize, hey, if I protect my stop loss, I'm actually gonna get a lot bigger wins. But I would be surprised if that's the conclusion. I don't. I generally don't see the value of it, and the idea of getting risk free on a trade to me, as I've gotten more mature as a trader, is a little bit of a lie. I tell myself, because every trade I take, I should be happy with the risk that I have on that position. If I'm now in a trade and I'm not happy with the assumed risk that I still have, then I wasn't happy with my risk at entry. So that can often be a symptom of oversizing your trades and trading a number that's too big, and like the fear of giving back that P&L. So the anecdote to that, right, is close as your P&L is increasing instead of letting it pull back, and to size the hell down. Shirley, I would be careful getting to that assumption, because nothing ever is 100%, right? Like, as traders, we're solving for like 60%. We're not solving for 100. So there are going to be times like today, or days like today, where you get a candle close that looks like it's in your favor, and then it rips and reverses against you on the next candle. The market's cruel. It's just going to happen sometimes. What I'm solving for here is, if I do the same thing for the next 1,000 trades, 10,000 trades, 100,000 trades, is my expected outcome to be more or less? And that's easier said than done, but the consistency is ultimately, right? The consistency in your actions across market conditions is ultimately how you survive long term. Now, I'm not saying that what you're doing is wrong, right? Your data is going to tell you that. But from my own personal experience, trying to, like a galaxy brain, do I do this one day, do this the other? Do I do this in a funded account? Do I do this in an eval account? Do I do this in my personal account? It just muddies the waters too much. And the more thoughts I have rattling around in my head when I'm thinking about placing a trade, the less likely I am to execute it properly, or the more likely I am to compound mistakes, or to skip a profit target, or to ignore a stop loss, or to oversize, or to do something stupid. So if I can keep my brain clear of those distractions and just focus on the variables I have evidence of working, it's generally going to work out a lot better. I can't want one mini. Can you rephrase that? I think to a certain extent, surely there is a lot of value in any trading account in just building up the muscle memory of closing as your P&L is increasing. And as you build up that buffer, as you start to make money, as you start to see your bank account grow, it becomes easier and easier to hold trades for longer, or to survive drawdown and to make things more rigid, because you have more financial backing, right? Like, if one trade isn't going to cost you 10% of your net worth, you're going to feel a lot better about that outcome. So it's like steps, right? You don't have to take them 6 at a time. You can just climb up slowly and avoid smashing your shins. Andrew, I would say, I would say that there's nothing wrong with trading 5 micros versus trading 1 mini. If anything, it's probably just a limiting belief. So I think just building that tolerance, building confidence in your system will allow you to, build up that tolerance. Now, the way that you want to build up that tolerance, though, is to gamify it. So if your objective is to scale up and trade 1 mini, 2 minis, 5 minis, 20 minis, 100 minis, whatever the number might be, gamify that progress. So going back to those 3 questions, right? What's one thing I did well? What's one thing I can improve? What's one thing I can focus on for tomorrow? Find the pattern of things that you can improve and judge yourself on that, right? So if on a trading week, you're like, okay, I want to make sure that I'm closing all my winning trades as my P&L is increasing. I want to make sure that all my losses are less than my max loss number. I want to never take more than 5 trades a day, right? Set yourself these like objectives. Then at the end of the week, prove to yourself that you can trade more size, right? So if you did, or you followed your rules on all 3 of those targets and you had no hiccups and you had no fuck ups and nothing looked egregious, then you've proven to yourself that, I'm actually a disciplined trader. I know what I'm doing. I've got a proof of concept. Let me increase my sizing. And then you repeat that same test over the course of the next week with that 1 mini. And you see either A, if it works, or where it breaks. And if it breaks, then you study, okay, was it me? Was it the market? Was it my strategy, right? Or what did I do well? What could I improve? What can I focus on for tomorrow? And tighten up those rules. So I'm a big believer in gamifying scaling up or gamifying breaking through those like mental barriers. Again, right? Creating facts to overcome feelings. And if we can create those structures or create those systems, we'll be able to scale up our trading no problem. You need to clear your buffer. So once you clear your buffer, which is the equivalent of your max drawdown, then you are payout eligible and you can withdraw money that you've made above that buffer. What else we got here, team? Anything else? No, it's a fixed drawdown. So if you take a payout, let's say you take a $1,500 payout on a $150K account, your drawdown won't now be $3,000. It'll still be $4,500. But you just can't take a payout that eats into your buffer. So with markets at or near all-time highs, do you find it more difficult to play breakouts without having market structure above? And if so, do you typically look for a pullback in this situation? So I always look effectively for a pullback, right? So every entry I take after a fake out has occurred. So fundamentally, I'm always looking for that regardless of if we're at all-time highs or if we're at all-time lows. Hopefully we never see that in our lifetime. But no, at all-time highs, no one has a reason to sell, right? Everyone who is long is profitable. So I generally don't have that issue. What I would say is that the thing that happens more at all-time highs is things move without giving me the fake out first, right? They move without giving me the pullback and they basically squeeze away. Kind of like, you saw on Friday. Friday, you had that nice little breakout, and then it's basically just a straight line after. No chance for a fake out after this initial confirmation, right? So this would have been your confirmation breakout above high a day. This candle opened and didn't print a single lower low. It just went straight up higher. That's more the behavior you'll see at all-time highs, kind of like squeeze type behavior. And the thing that I want to avoid in those situations is basically chasing those entries. So if I don't get a fake out, I don't get an entry, and the fake out basically is designed to shake out the weak side. When you're at all-time highs, you have less weakness because everyone who is long is profitable, and generally you have more people long than short. I appreciate that, Shirley. Glad you could join. Any other questions here, team? Any other questions? Remember, we'll do another one of these tomorrow and Thursday as well. All right, so Monday through Thursday, every single day, 4 days a week, we'll do these, and you'll have opportunities to obviously ask questions in the stream as well. So, everyone's going to get, 20 hours of coaching a week. Correct. David, yeah, you're correct. So Roberto, sorry. I would challenge you to find that answer with facts, right? What I feel is the truth is often very far from it. I would study that in a little bit more detail. And then if you want something we talk about in a one-on-one. So yeah, David, it's a 45 drawdown from your end of day balance. And then once you're in a live account, 0 restrictions. All right, what else we got here, team? I got to go give you a few more minutes, but I got to go eat some dinner here pretty soon. I would go through the courses. I would watch back some of the coaching videos on this YouTube playlist, right? So if you go into my YouTube channel, there's a playlist with all 16 of these coaching sessions. I'd probably work through that. That would be the right starting point, I think. Yeah, David, your objective with the prop account while you're getting evaluated to go live in the market, to try to get paid as much as possible, right? There's no value in you building up sim profits or a sim buffer. It's meaningless. So take as much money as you can out while we evaluate you to push you to unrestricted trading. Hey, appreciate that, Roberto. Yeah, if you go to daytraderfunding.com/trading desk, you can get 40% off the coached tier. and it'll just be automatically applied at checkout. So if you scroll down to the very bottom, you'll see the codes. Coached 40 will give you 40% off the coached tier. $221 for a 50K account. And that comes with a free reset. So if it doesn't work, you get a reset for free. Access to the live stream, right? So that you can join the live stream, latency free, go through all the coaching material, get access to everything I offer. It's the best deal in prop firms. Sign up, get paid, learn from the best, and become a better trader. That's the goal. So in evaluation, Darren, it's a end of day drawdown, right? So, or fixed drawdown, sorry, right? So you can lose, you have all the way up to whatever your minus 3% is. When you get to funded, it's an intraday trailing drawdown during your buffer stage. Once you clear your buffer, it's an end of day drawdown. Once you clear your buffer, you become payout eligible, and you can start to get paid nicely. 4 payouts a month. Yeah, goal here, try to make it as trader friendly as possible, right? Like I'm incentivized to find as many killers as possible and to push them live. Fundamentally, right? The more people I have trading live capital, the more money I'm going to make. If I can take 20% of your profits by teaching you my strategy, showing you my trades, letting you copy, we're all going to make a lot more cash. So not here to be predatory, not here to be like a casino like all these other prop firms. Day trader funding is the only prop firm that exists that actually is designed to help you win with direct coaching with someone who worked institutionally. No one else can offer that. No one else has the courage to offer that. And that's what makes our company very unique and special. It's Volumetrica. We'll have Trading View coming hopefully in the next month or two. Just waiting for Rhythmic to finish the onboarding process for us. So we'll have other platform options for people here soon. But Volumetrica, we specifically chose because has basically just the fastest execution of all the platforms that I tested. So when you click, you're getting in at the price you want with very minimal delay and slippage. So I think that that's very, very powerful. The volumetrical platform is very similar to those who have used Thinkorswim in the past. So there's also a lot of crossover with familiarity with other brokerages. It's made by the same company. What else we got here, team? Any other questions? Good. Yeah. The tick level update's awesome. And you know what, guys, their team, like, they're very open to feedback, right? So if you want something to be created or you feel like you're missing something, if you raise a support ticket through the platform, they'll add it to the queue. When I have my monthly meeting with them, they'll raise all the tickets that were submitted by you guys, and anything that has more than 3 submissions, they'll put into their production queue. So they're really good. Like they're proving to be a very excellent partner for us. So I think, you know, their transparency, their execution speed, the stability of the platform, like these are all really big perks, and I think it's worth taking advantage of. Yeah, I mean, TradingView probably has the best UI, right, or user interface. It's very, very intuitive. The volumetrical buttons feel a little bit like Boris from GoldenEye designed them, but you know what? Speed of execution and getting in at the price you want with a working trade copier is a really, really good compromise. Like, I don't know how many issues we've had with other copiers, right, where they don't work or there's slippage or there's whatever. You don't get that with Volumetrica, and that, I think, is a huge technological perk. All right, guys, final call for questions here. Final call for questions. If not, my grumbling in my tummy is going to start to pick up on the microphone. There's a ton of videos that Volumetric have created about how to best use the platform. I would recommend reviewing and watching those. Yeah, I think it's time, Michael. You're right. All right, guys. Well, have yourselves a great rest of the afternoon or rest of the evening. See you guys all in, oh my gosh, 12 hours. Bless your souls. Or less than that, 11 hours. So have yourselves a great rest of the day. We'll talk soon, and we'll have another one of these calls tomorrow. Today, right, we're going to try to do one call right around after market close, so like maybe the Monday, Wednesdays, and then the Tuesday, Thursdays in the evening, so that we have a spread so that, a lot of people can join and participate. If, you want to have a specific time or a different time is better, pop it in the chat or pop it into the live stream chat tomorrow. and we'll find the time that works best for everyone. I'm willing to move around my calendar within reason, right? Like if you're not going to ask me to stream at 11 p.m., amazing, because I'm going to be asleep by then. But everything else is pretty much fair game. So, want to find the times that are best for everybody, kind of a group thing. So we can talk about this a little bit again tomorrow, but I think, the one at 4:30 and the one at 8:30, I think that's a pretty good compromise in the short term. All right, everybody, have yourselves a great day. We'll see you tomorrow.